last people speaking this afternoon, so I hope I can give you some interesting things to think about. I just thought I'd ask how many people in the room have already made an investment in a small unlisted business? Oh, great. How many people in the room would consider themselves to be a bit of a business angel? Fabulous. Right, a few people are already doing this. That's super. Okay. So just a little bit of an intro about UK Business Angels Association. If you don't know it, we are the trade body for angel investing here in the UK. We look after, as was already said, about 18,000 investors all around the country. And most of these people I work with are investing not on their own, but in groups. And I'll say a little bit more about that because I really do recommend that you work alongside other people when you're backing small businesses. But we also work with venture capitalists, we work with crowdfunding platforms, accelerators, lots of corporate advisors and banks and other sources of finance. So we're a real ecosystem of early stage investing. And I hope I can tell you a few more interesting points today. So for those of you who are kind of less sure about, what a business angel is and how they differ from other sources of investing, the most important thing is you are using your own money to invest directly into a small business. And I think that's very different to many of the kind of investments many of you have been thinking about. When you invest at a distance, you put your money into a fund, or you're working with an advisor that does all the investing for you. This is you working directly with a small business and putting your own money into it. And many people think you have to be really, really rich to do this, because I think many of you have probably seen Dragon's Den, when you see people, putting substantial sums of money into a small business at a time. Well, we totally don't recommend that. We recommend that you do this in quite a small way, and that's why you really do it alongside other people. So between about 5 and 20K is as much as you should put behind any small business, because what you're looking to do is really spread your bets and build a portfolio of very small businesses. You cannot know how one investment will go in one small business, no more than you can making one individual investment in a listed business. So you do have to build up a portfolio over time. So making maybe 2 or 3 or 4 investments a year is really what you're looking to do. So that's something to bear in mind. The other thing, of course, and what really differentiates this, is that where you can, you're not just bringing your money, you're bringing your knowledge, you're bringing your expertise, you're bringing your contacts, your links. Do you know any customers that can help that business? How many people do you know that you can think could actually really help that business to really build and grow? And that's really what differentiates yourself. This is not arm's length investing. This is really working alongside closely with small businesses. So that's really what makes it, again, a very, very different form of investing. Another thing to bear in mind is that you're often generally not investing on your own. You may well have venture capitalists alongside you, other bank loans, other funds, crowdfunding. Building a nice pot of money around that business is what you're looking to do as you go along. And then the other thing to bear in mind is that this isn't a short-term game. If you think about how long it takes to build and grow a business, you're on a journey with that business over several years, and you're going to really help that business grow. So I think that's something to bear in mind. This is something to do where you've got a bit of patience. You're not going to get that great exit in a matter of a year or two. So that's something probably also to bear in mind. It's worth also knowing how big this market is. So you'll see there that nearly 1.8, 1.9 billion, was put into small businesses last year by this kind of investing. And if you compare that with the amount of venture capital, there was about 480 million. So this is a very big market. Many people are backing small businesses. And this is something to really think about. This is very significant as a source of money that's going into businesses here in the UK. And if any of you are looking for investment, that's also something for you to bear in mind, because angels are a very important source for you if you're growing your small business. So what else do we say? Well, as I said, angels really are the key. We call them angels because it's not just the money. It is the skills, the business advice, the help you can bring. You'll probably sit on the board, you'll look at the finances, you'll see how you can help. And that's really what makes it special, because you're really getting involved with that business. You're really on their journey. It's very, very different to something where you put in your money, you just read the newspapers and follow the stocks and shares. You might hear from your advisor every now and then how it's all going. This is you being involved, helping to make it happen, really influencing the outcome of your investment. I will say, and I'll say it right now, it isn't something you would do as your only form of investing. You'll probably do it alongside lots of other things you're doing. Probably only about 10 or 12% of your spare finance might go into this area, because it's pretty risky. You're backing small businesses and you don't know what might happen to them. I mentioned syndicates. Now, the great thing about angel investing is that you do it as a team. It's a team sport. You don't do it on your own. You always do it alongside other people. It's great fun. You share the deals, you share your knowledge, you share your skills, you pool your money, you pool the risk. And so it's something that you're not doing quietly sitting in front of the internet or talking one-to-one to your advisor. This is something you do. You might well have supper together and share the deals and share your thinking about the deals. You go to groups and you see pitches. If any of you have been to pitching events, they're great fun, and you meet other angels and other people you want to invest in. So it's something very social, very collective, and that's what really makes it work, because you're not doing these things on your own. You're doing it alongside other people. It's an investment group, an investment team, an investment syndicate that you'll be generally part of. So, why would you do it? Well, I've been doing it for many years, and I guess one of the great things is it's really great fun, because you can imagine all the fantastic businesses are out there, everything from food, from technology, from med tech, healthcare, education, anything that really you are interested in, you can back. And the whole idea of it is that you're putting your own interests into play. If you're genuinely interested in an area of industry or a sector or particular kinds of people, I back a lot of women entrepreneurs because I'm really interested in helping women to build and grow their business. You can really think what it is you want to back. So, it's really great fun. There is a bit of altruism in there as well, because, to be honest, you don't know how it'll go. It's no more than any other investment. You have no idea exactly how it'll go. But by influencing that with your help, your support, your advice, your interest, you can make a huge difference to the success of that business. So, there is that side of it which is a little bit altruistic. But it is definitely profitable. And many people have made considerable money in angel investing. It's surprising. I'm sure you've all heard, about, you've heard about Google, you've heard about Facebook, you've heard about Amazon. All of those have had angel investing behind them. All of the great unicorns around the world have started off with that early stage investment, which has really helped them grow. And if you can stick in there, you'll definitely make money. And that's what it's all about. But it's also risky, and you do have to bear that in mind. So this is the kinds of results that we can see. So at this end, this is what angel investing, if you do it properly, if you have a mixed portfolio, if you do it in syndicates, if you invest in what you know and you really help your businesses, you can get that kind of IRR from your businesses. And if you compare that with listed stocks on AIM, or the FTSE 100, where you might, in fact, also be backing, you can see the difference. Now, it's hard work and it's fun, but it's worth bearing in mind that those results have totally been proved to work. The way it actually works is that you'll have quite a number of those businesses really won't grow very much at all. A few of them, you'll get a 5 times return or a 10 times return. And then every now and then you get a real stonker, and that's what really makes the difference. So it you just got to, ride the wave a little bit, but it's great fun. How many of you know about the government tax breaks for this kind of investing? So for those of you who don't, We've been incredibly lucky here in the UK because for over 25 years, our government has been backing this kind of investment. So if you back a very early stage business, for every £1 you put in a small business, you will get 50% back from the government in a tax break. You'll get it in your tax return. So when you put your return in, if it's a business that takes less than 150,000 in total from the investors, or however much money you take, say you put £10,000 in an early stage business that has less than 25 employees, and has only been running for 2 years, so that's very early, very young, then you will get 50% of that back. You will get £5,000 back immediately in your tax return from the government. If the business goes pear-shaped, in other words, it doesn't succeed, you will get loss relief, and that will be made up to your normal tax level. So if you're a 45% taxpayer, you will get loss relief on the back of that. You also get inheritance tax deferral, and you get capital gains tax, 50% of any gain that you've made. So if you invest in a property that you have made a gain on and put some of that money into the business, 50% of that capital gain will also be wiped out. So it's very attractive. If the business is a little bit more developed and is looking for more than £150,000, then you get 30% tax relief and all the other benefits. So it's still incredibly worthwhile, and that's been a massive incentive for us. The other thing is that the government has put a number of co-investment funds. So so for every £1 you back the business with, there are co-investment funds that will bring another 50% alongside that investment. That's what that gives, is extra firepower to your investment. It doesn't give you relief, but it gives you extra firepower. So you can see this is a very attractive space if you want that kind of roller coaster ride, which is much more fun in my view. So this is the kind of multiples that you might expect to see. So you can see that, you'll get an awful lot of not very exciting stuff here as well. But what you will get, if you're patient and you'll stick with it, you'll get to see some very, very interesting outcomes. And I would say, I have to warn you that this will be from over about 8 to 10 years before you get that really big return. Every now and then you can be really lucky. I know people who invested in Deep Minds. I don't know whether you know that company. It was bought by Google after only 2 years. So, that's random. It can happen. It can be great. But very often you have to wait. You've got to be patient. These are some of the kinds of sectors that have been doing especially well recently. So life sciences, and when I say life sciences, that includes everything from cures for diabetes, cancer, diagnostics, therapeutics, lots of things that you might want to back. I generally back things like that because I like to feel I'm doing a bit of good with my money. I'm really helping to solve some of the social problems as well. But you'll also find that things like automation, so in fact, people are backing all kinds of things around electronics and IT. They've been doing pretty well. And also, there are huge numbers of investments have been made in everything from games to food to drink. Anything that you think is interesting is pretty much open for your investment. So what do investors look for? Because if you're a small business looking for investment or you're an investor yourself, it's really worth thinking, what are your considerations? So these are really the main things. The business is small, so what you're really looking to know about is the team. Have they got the passion, the skills, the ambition and the knowledge to really build a great business? So you spend a lot of time talking to them. You ask them a lot. You check them out. You check them out on Facebook, LinkedIn, and you get to know if they're going to be able to build a great business. Will they really build a strong business? And that's the main thing you have to go on, because this business is pretty early. They won't have that many sales. They won't have so much for you to look at. The second thing that you really want to know is that business may be small now, but will that business really scale? Is it really going to grow? Is it going to expand around the UK, internationally? Is it going to open lots of other other sources of opportunity for you. And that's really what you're looking for. So you judge the scalability. You look strongly at the finances. You have a look and see if you think the business model is really going to make money and really bring you a decent return. And that's something, you really do want to focus on. And then thirdly, the value proposition. How different is it to anything else you might have seen out there? Is it a Me Too business that's really just going to have too much competition to really make an impact in the market? Or is it really going to be able to stand out from the crowd, have a really strong competitive position, got some great IP, something that really differentiates it? So those are really three big things you're going to look for when you're making that decision. So I think that my final recommendations to you are, if this is interesting to you, it's really good not to do it on your own. Really, really good to do it with another group. Find other players. And at UKBAA, we have over 70 groups around the country that are investing. So we have a strong directory there, and you can search it by the kind of sector or stage or kind of money. And if you're in here today and you're a small business looking for angel investing, then again, have a look at that directory and see the interesting groups. We also have a massive schedule of events. Every week, there is some great pitching events happening here in London, around the country. That's a great way to find good deals and to meet other angels. So do have a look on our website for those. And if you really want to understand more about this, we have an online education program called The Effective Angel Investor. And I would recommend you check that out. It's 6 online modules, at the end of which you get a certificate. And it gives you everything you might want to know, from really understanding the whole process, from what to look for, how to do a deal, how to use the tax breaks, the legal processes, and then what to do to really build and grow a great business. So we've had about 22 great angels, investors, all giving their experience and expertise into that. So it's well worth having a look at that if you'd like to know more about this area. And then finally, that is our website. It's a great source of information about angel investing, whether you're an entrepreneur or an investor. And find out about what we're doing. We run lots of events and lots of opportunities. So really great to meet you. I hope you enjoy the rest of your afternoon and hope to see you again. Thank you.